I've not shared my screen, right? Okay. When I tell you, then we can start from now, yeah. To share screen, yeah. Okay. Hi there, guys. Welcome and sorry for the delay. Today is Friday, the 9th of September, and welcome to today's Friday market wrap-up session with me, Kenny Simon, from Bretton Financial Trading Academy. Okay. All right. Perfect. So I hope you guys can hear me loud and clear as well, and we shall then begin the webinar for today. And I do apologize once again for the late response, as well as for the late beginning of the webinar. Now, as of today, I think we have got quite a number of things to discuss because it's a wrap-up session. I believe the trade ideas and trade signals have gone really well as of the whole week, as of Monday onwards. Monday's trading sessions, Wednesdays as well. I've shared some great trading ideas, and then they turned out to be trading signals. So trade ideas could actually be just trades ideas in terms of being signals that has not been executed, but signals are those that may have been executed by myself or by traders as well, and it has actually been a trade that's been triggered. Whether it's for profit or for loss, it's another matter, but it's a trade that has actually been triggered. So that is what I would be calling it, a trade signal. A trade idea would only be an idea or a suggestion of entries, exits, stop losses as well, and then the patterns, and it is entirely up to the traders to want to execute it or not. Okay, all right, guys, I would like to jump straight into the chart, but I think it's always best for us to look at the trend for a Friday, for today, and just overlook just review the data, economic data releases for today as well would probably be the best thing to do, just so that we are aware of the happenings in the market for today, September the 9th. So, as we can see on today's economic calendar, we have got a couple of, I think about 2 or 3 high impact data releases coming from Euro and Canada. And these are really quite crucial, as well as important. In the important level, it would actually be classified as highly important, causing high volatility possibly as well. And this is due to ECB's president speaking. President Lagarde will actually be doing a speech today, and for Canada, it would actually be both the net change in employment as well as unemployment rate. So now we have a bit of an idea of what to expect from the fundamentals, or I would say more on the economic data releases side of things. And now what we can actually then do is to just mirror that up with tools like the heat map as well as the top 10 movers. Now I would like to also highlight that our team at the 10 Academy has also worked on the dashboard a lot more, and it's got a nice look and feel to it as well. And as you guys can see on my screen, we have got all the relevant elements and tools for you guys on there, all the options from courses, webinars to what do you call that, certificates, news and tools, and various other things. So ebooks are also available in there. So this is basically going to be your toolbox with many tools in it. So it's a one hub, one place 10 Academy dashboard for you to actually conduct your technical and fundamental analysis all at one place. So it's not necessary for us now to actually go to various websites, you know, to go into the economic calendar at one site and then to go to the tools, heat map on the others, and stuff like that. So here, for example, if you were to click on one of the options, then it would actually be showing you very soon more tools that will be available. As you can see see you've got economic calendar there, you've got real-time charts, technical analysis that we will be working more on together with Toby as well, and we will actually be you guys will be expecting a lot more analysis, written analysis as well, with screenshots and various other things in the technical analysis section. Okay, there we go, guys. So this is your dashboard. I would like to just remind you guys that it's really essential to visit your dashboard and make it your hub, as I've mentioned earlier on, for conducting both your technical and your fundamental analysis, or just market analysis in general. So this is your one place, like like the cockpit of a plane as well, where you are able to see the whole dashboard and all the tools are available. Okay, there you go, guys. Now what I would like to do right now is to just brief you guys on the status of the heat map as well. And the heat map, as we have seen yesterday, was not yesterday but the day before, on Wednesday's session, was very interesting, and I've given some trade ideas as well as trade signals, especially on, I think it was USD crosses, but more on the Euro crosses, and Euro JPY we'll take a look at in a minute on the progress of that. Congratulations to those who have actually traded the trade signal, because we have gathered or accumulated close to about 100 pips on Euro JPY alone, and there were so many correlated pairs that were actually following through, whether negative or positively correlated to the Euro JPY. So there were loads of chances and opportunities, like a lot of traders have actually grabbed that opportunity to correlate with the other pair, so that would actually multiply your profit potential as well. Okay, so we'll take a look at that, but right now it's probably best for us to just skim through the whole heat map. The generic ones itself, for example, tells us that all the currencies on the left are seemingly very bullish against the USD. So does that actually mean USD is getting weaker, going into a bearish cycle or mode at the moment, or is just a reversal? We'll take a look at that when we do our trend analysis. But right now what's important is for us to actually do a bit of a trend analysis using the tool, but most importantly to be able to spot the right combination of currencies to make it a pair that would be tradable for the whole of Friday before market closes for the week. So this is basically where we could see that USD, it's looking like it's on the downside, depreciating in its value, and then we have got AUD right here appreciating in its value as well, because we are only focusing on the dark blues or the dark reds. And here what it's telling us is that we've got currencies on the left, they are more bullish than the USD but more bearish than the AUD. So AUD is on the upside for some reason. We'll find out the reasons as well behind it, but most importantly, which combination of currencies making them tradable pairs for today, Friday, especially intraday trades as well, would actually be a much better choice as opposed to leaving your trades open on a Friday up to market open on Monday. That would actually be a little bit more riskier, but it does actually depend on your risk and money management as well as your strategies. So let's take a look at currencies in general. We've finished the generic one. Now we're going specifically into, let's say, USD right here. As I scroll downwards, just as a generic view or a bird's eye view, I could see that we've got more standardized sort of color, more dark blues and blues on CHF pairs. So CHF, as we can see here, is really bullish against the USD as well as the CAD. So these two would actually be the ones that I would be looking at, USD CHF and GBP CHF. And then as we scroll downwards as well, now funny enough, this is one of the safe havens. So we want to look at JPY. JPY has actually given us loads of trading opportunities to the downside as of Wednesday onwards, and now it's sort of correcting itself, so it's becoming stronger in its trend to the upside, but it's not very much standardized with being totally bearish like what we have seen on Wednesday. That was the main reason for giving us that opportunity to trade Euro JPY, because JPY was across the board, were all in a red and dark red, so that was a very good thing for us. And then we did a trend analysis and then a technical analysis after that to sort of ascertain the market for Euro JPY to be really bullish, because Euro was definitely more bullish at the time compared to JPY. So here, for example, on the other hand, I think now it's sort of switched to the other safe haven apart from JPY, which is CHF. So I see that there may be potential CHF trading. That means CHF crosses to look up for on the upside for CHF. So here, for example, if we're looking at USD versus CHF, that would actually be a bearish type market that we would expect because of the bearish sentiment concerning US dollar or US crosses at this moment of time, or even the US economy, or generically whatever that's been going on in the US at the moment would probably be driving the market to the downside, especially for its currency at this moment of time. So that's quite clearly seen in this row right here under USD and also under AUD. So it is, all these currencies are seen to be very bullish against the USD and very bearish against the AUD. So AUD would actually be sort of collectively seen as impacting the other commodity currencies as well, like the NZD, together with it, of course, the CAD as well, and the ZAR, the South African Rand. Okay, there we go, guys. So this is basically my take on what we could actually be looking at, the USD CHF or CHF pairs. And if we go back to CHF a little bit more, we could actually look at USD CHF, the CAD CHF in particular, and the GBP CHF as well. But let's now combine the use of these tools on the heat map together with top movers as well. So here, for example, as we scroll downwards, and let me just refresh that a little bit better. Now we could actually see that CHF, USD CHF, as what we have mentioned earlier on, seem to be also giving out hints that it could potentially be clear in its trend across the 4-hour, daily, weekly and monthly chart. Why? Because of the 4 dots that you can actually see. But then it's also confirming the current situation of selling off the USD, mainly because of the negative symbol right here. But it's probably best for us not to rely 100% on only tools, because we would need to have that reliability upon ourselves as well, and self-belief onto our own trend analysis. So when we go onto the charts, it's probably best for us to also look at trend from different time frames, and then collectively match it up with all the tools that we have seen on what the current trend is as of the time that you are looking at the market. Okay, so here, for example, it is giving us that a very clear hint that USD CHF is definitely a pair to look at onto the chart as well, to ascertain its trend at this moment of time. At this moment of time, it's still confirming the USD's plunge, or the depreciative value of the US dollar in comparison to the CHF. Now, the other one is the USD JPY. Again, it's on the negative side. I mean, the change symbol right here has got a negative symbol, so that basically means it's a sell on the base currency. Your base currency is the first currency on the left. Yeah, that's called the base currency. So when we're looking at the chart as well, the same thing, it's always based on the base currency. Okay, now we've got these two here to focus on for now, USD JPY and USD CHF, to take that through to the chart and conduct a trend analysis before we go further into a trend or even technical analysis on a deeper side of it. Okay, now we can move on to the chart, but I would like to go ahead and give you the good news about TPs that has actually been hit as of yesterday, I think, or maybe just before yesterday, because we started the session and analyzing Euro JPY and giving you the trade signals as well as trade ideas on Euro JPY. So that was really sharp. It was fantastic that it hit all three suggested TPs as well. So as you guys can see right here, we had the entry drawn as of Wednesday's session. On Wednesday's webinar itself, we have actually suggested the entry at 142.90 for a buy for Euro JPY, and then you've got a range of TPs as well. You had a range of entries as well, either at 142.90 or 143.10, to be more conservative at 143.30 as well. So, or you could actually be entering and re-entering, so you could actually be benefiting it 3 times over with 3 TPs hit with 3 separate trades as well. So that would actually be an ideal scenario, because each one just entering at 142.90 and exiting, or your first TP at 143.70 alone would give you 80 pips, just that one entry. Then if you were to actually enter the other entries as well, so that would actually give you a minimum of 80 pips per trade, giving you a minimum of 240 pips just from Euro JPY alone. So imagine that if you're trading with 0.01 in terms of the lot size itself, giving you roughly about $1 per pip, that would give you $240 just gain in within a day to 2 days. I think it was about 2 days to take, but then you are getting 240. But imagine if you were to trade one lot, then that would actually be a close to about 2,000 plus 2,400 as your gain, and that's just in 2 days. So that's a fantastic trade idea and trade signal. But what's most important is what have we learned on Wednesday. And on Wednesday we've actually learned a little bit about the geometric patterns as well, but most importantly the use of psychological numbers for entries and exits. So here, as you guys can see, I would like to just highlight the importance and the effectiveness or accuracy of using psychological numbers to enter and to exit. So here, for example, we had a confirmation from previous mother candle as well that there would be some buying power, and at that time we were also using the moving averages to confirm to us the smoothness of its running to the upside, as well as the cluster of candles at the time, together with the ADX at the time was also very positive to the upside with the level 25. The blue lines above was above the level 25. So there were so many ingredients, and these are the ingredients of success that we talk about every Monday at 12 o'clock Cyprus time. So I want to always revisit these ingredients because they are super crucial, so we don't actually miss out these ingredients as elements on our PRICE or price trade plan. Okay, so the price trade plan would have so many techniques and strategies and approaches within one letter of the word. So P basically stands for psychology of the market, price patterns as well, psychological numbers as well. So there are various elements to that one letter, and then followed through by R, which is your risk and reward, and then your I, which is your insiders information, which you would be getting from myself and Toby as well, and the group of instructors that will be guiding you, as well as your mentors. So and then we go on to confirming all these elements before we actually take that plunge into executing the trade. So even though you guys have actually seen the entry prices and the TPs and giving you that trade idea, I have taken the due diligence of going through the step, and I've been doing this for the past 15 years, always going through the steps before I make that decision. So I have analyzed Euro JPY in advance, and then we went through the whole step together, especially on the technical side of it as well, and also the fundamental side of it, of what's been happening and how the news and breaking news, as well as economic calendar, current situation economically, have actually triggered that move to the upside for Euro and then the downside for JPY. So JPY was triggered with whatever happenings in Japan that have actually just encouraged that whole plunge of the value of the Japanese yen. So we were able to match a strong pair, a strong currency together with a weak currency, fueled by what's been happening, whether economically, politically, and various other factors as well in their respective countries. Okay, so that was the whole situation that has then given us all these numbers, entry prices, and also TPs from the technicals perspective. So hence the reason we were having a high probability trade signal and trade idea at that time, and I must say that congratulations to the traders out there that have actually benefited in all these three TPs. Now, this is what I would like to highlight to you guys about psychological numbers. Look at all these three lines as TPs that has actually been planned to be your take profit levels, right? And they are all just beautifully executed to be your TPs. But most importantly, look at that whole candle price action right there, and look at how the reversals were actually, even the body of the candle and sometimes the wick just reverses on the dot of the psychological numbers, or very close to the psychological numbers, or even very close on the dot of the TPs that we have actually planned together. And that goes for the entry price as well. Hence the reason we've never taken the 142.80 or anything close to that, just to make sure that the candlestick or the price at the time would have that momentum to go upwards. So it did actually go upwards, beyond the 142.80. Hence the reason we want to add usually 10 pips above the psychological numbers to make that your ideal entry price, okay, as opposed to taking it too close to 142.80, because anything can happen at that time as well. It could actually be triggered by a breaking news, and that breaking news, from the many years of me trading, I would say that even a sudden breaking news would also trigger the reversal at the psychological numbers. That is how powerful psychological numbers are. But then these psychological numbers, the sets of 4 psychological numbers based on the last 2 digits of the price, are chosen and experimented with close to 10,000 charts over the past 5, 6, 7 years as well. And now we're still doing that test, and just to make sure that we are still going to be relying on these 4 sets of psychological numbers, which are your 00, they are not in order, of course, 00, 20, 50, and 80. All right, so psychological numbers are used only for entry and exits, just to fine and fine tune and tweak the current price or the price that you would like to enter based on your current strategy, and just tweak it using psychological numbers to get your ideal price, in order for you to not get caught in a reversal like what has actually been proven right here. As you guys can see, this is on a daily chart for Euro JPY, right? And we have chosen and tweaked the price for entry at 142.90, and then we have also given the choice of 3 take profits, choice of 3 entries as well, and they were all based on various elements of candlesticks, body, opening price, closing price of mother candles. So mother candles are super crucial, and when you combine that ingredient or that element with psychological numbers and various other elements in both fundamental and technical, then you have got a trade plan, elements that makes out the outline of a trade plan that's called price. And then when you have all these ingredients, you are basically going to increase the probability in the accuracy of your analysis, your market analysis, okay? And also in the probability of your trades reaching your take profits. Okay, there you go, guys. So yes, once again, congratulations to you guys. I've got plenty of emails about Euro JPY, and there were hundreds of traders have benefited from that move, as well as shared on Wednesday. So this is great news for that on Euro JPY, and I've also shared Euro JPY's correlated pairs as well. So imagine you have traded that 240 pips minimum if you were to trade only $1 per pip, let's say, and that's your minimum. But then if you were to increase or trade every entries that I have suggested as well, you would be multiplying it by 3 times. So imagine you're just trading $1 per pip, but then you have $240 gain from that one entry, and then you enter again, and then you would actually be having a minimum of 240 as well, right? And then another 240. So imagine that is 240, or I would say, let's say 200 or slightly less. You multiply that by 3 times, and that's basically your profit potential, or what you could have profited in just trading the Euro JPY with multiple entries and multiple exits, right? And then you add it on to correlated pairs, you are multiplying it again. So if you were to trade correlated pair with Euro JPY, let's say GBP JPY, AUD JPY as well, and whichever that has got a very high correlation ratio with Euro JPY, you would be multiplying your profits just with one pair, and with the correlated pairs alone at least 3 to 5 times over. And that's basically how we should actually be trading and strategizing our trades. Okay, all right, hope you guys are clear with that, and if you guys have got any questions at all, just ask me at any moment of time. Now it's also best for us to visit and revisit gold, and gold did a brilliant job in reversing exactly on the dot of lines that we all have drawn together prior to all these movements. So we've drawn these movements a couple of days, or maybe about a week. I would say a couple of days, because of the sessions that we have done it together on Mondays, Wednesdays, right, and Friday. And you guys can see that this was an awesome downtrend for gold, and we benefited from selling the gold, and then it started to reverse as well, and it reversed on the dot of where the D point was projected. So your D point was projecting your take profit for a sell, and then it reversed and then created another pattern for you on the upside. So imagine you have got the geometric patterns strategy as well that could actually be benefiting you by getting it combined with your current strategy as well. So all that we have here at 10 Academy, as well as the Bretton Academy, are strategies, approaches, and methodologies that could be amalgamated or combined with your current strategy. It's not a takeover, it's not to replace, but it's actually to augment and to add on to your current trade, to polish it, to make it sharper. That's the whole idea for everything that we are sharing with you guys. Okay, so With this here, at this moment of time, gold is trading at the 1728 area, 1728, 1729. So that basically means 1 ounce of gold. It's currently or roughly about 1,727 or 28 US dollars. Okay, so what we can see at this moment of time is I'm leaving that red zone there, because at this moment of time, even though despite the corrective move to the upside for gold, and this is based on the daily chart that we're looking at right now, it is still in within a bearish zone. Now that bearish zone highlighted in red is a zone that has been picked up from various factors. We've analyzed the market from various factors, but one predominant factor is the body of a mother candle, the body of a bearish mother candle long time ago. So the other thing that I would like to remind you guys, because I had some emails asking me about the Euro USD, and that was also a very successful trade. Right now it's got a bit of a reversal, and it reversed exactly on the dot of the two lines, horizontal blue lines that we have drawn days before, right? So look at how magical the drawing of support and resistance lines based on your closing and opening price of previous mother candles. Very, very significant mother candles would actually provide you with the best, most accurate a level of resistance and support, making it a zone, of course, but then that's based on opening prices and closing prices of very, very bullish mother candle. Visually bullish, you can actually see that. Of course, you can actually do an evaluation of number of pips and stuff like that, but it's not necessary. It's visual, and your visual techniques itself, from the angle of how it is trading in terms of the cluster of candles, also the angle of how the three lines are trading, and the movement of each candle's bodies as well, wicks. So there's a lot of things that we can actually combine all of it to make them ingredients for successful analysis before it becomes a successful trade. So here for on the daily chart for Euro USD, we have outlined, and I think I have actually drawn the two horizontal blue lines here, one on 0.9928 and the other one on 0.9869. Now we've drawn this together on I think it was either Monday or Wednesday's session, and we have drawn these two lines based on an opening price, or with the wick itself, of a very, very bullish mother candle that actually happened in the 1980s. So it actually happened in April 1980, and when I was just 2 years old at that time. So here, for example, this is how significant we could actually improve our drawing of support resistance line by spotting and evaluating mother candles of the past. Okay, so there we go. Now I just want to demonstrate that, because I had a couple of emails that wanted me to re-demonstrate how I've actually drawn these two lines to actually mark that very big reversal right here, right? So this reversal alone that is happening right now has already it's bounced off, as you guys can see, bounced off exactly from the 9869 area or the 9928 area, bounce off from that level that we drawn together days before, and that's basically right now it's already 230 pips appreciation of price for Euro USD. So why did it actually stop, pause there, and then boom, bounce upwards to the upside of more than 200 pips? And that's a significant bounce upwards, exactly on the dot on there. So let's go back and look at where in the past that two blue lines were actually drawn from. Okay, so just Okay, there you go. I've highlighted in blue as well. Now, right, there you go. This is where we have had a bullish candle right there. And if we were to go on, I think it's probably best to look at the weekly chart for a better picture right here. So as you guys can see, we were monitoring the price for Euro USD going to the downside, but then we've highlighted the two lines right there, and that is based on the opening price and also the longest wick of this area, or the low at this area. Basically, that was the push upwards to the upside based on that. I think it was also, I think further up, further somewhere, yes, there you go. This is what we based on, this one here on the weekly chart. As you guys can see, this was a mother candle that happened in the 1980s, in April 1980, right? So, and the opening price right there, up to the closing price, was worth 530 pips on a single mother candle. So that was where we made it a referral point based on the mother candle itself. So that was how I've actually drawn that line, but that was based on the daily chart, if I'm not mistaken. Oops, it was not prepared for the sudden change. Give me a second. All right, this is only because of the feeds that was not in time, mainly because of the connections and stuff like that, but nothing to worry about. I'll come back. Okay, let's analyze this candlestick right here, worth 530 pips. So it encapsulated that this candlestick here, or the two lines, were based on the daily chart, so hence the reason it you know, it's not that accurate here on the weekly chart. But of course you can draw a third line if you want on the opening price. Now the other thing that I would like you guys to notice is that it's the nature of that candlestick alone, right? That nature of the candlestick, meaning that whether or not, you know, from the opening price, if it has no wick to the downside, it's a very powerful buy. It's very decisive. It was a very decisive move. Maybe it's the big boys have actually triggered it. Maybe it's you know, more institutional as well at the time that have actually triggered that very powerful mother candle to the upside. But most importantly is to notice that when you've got an upward or a bullish candle like that one there, and it's open its price with no wick, that is a very, very significant, strong movement and decisive movement to actually buy at that moment of time. So hence the reason we have got that there. See, so this was a very beautiful move of a candle in the 1980s, but you see, it doesn't really matter how far back. It's the nature of how the candle have actually moved with no wick to the downside. But most importantly, there was a drop beforehand, right? So there was a drop in 1980 as well in January, right? So this one here was in April. So something happened, triggered that fall from January, but then it got reversed very strongly with a single mother candle. So that is why that zone, that area there, should actually be your reference point. It's a very significant reference point because it could have a very strong story behind the move of the Euro USD at the time in April after the drop from January. So you have got 3 months of drop, and suddenly you have got an appreciation, and that appreciation was not by little candles going to the upside, but that was triggered by a single 530 pips worth of mother candle to just push and reverse that whole downtrend onto an uptrend. So this is where the significance of the movement is more important than just looking at oh, it's a mother candle, yes, it's you know, it's got a support there. You know, we could always adjust and use all that theories and elements that you are familiar with, but most importantly is to actually update your approach and to combine it with other little ingredients to make to make the analysis sharper. That's the most important thing, right? Okay, there you go, guys. Any questions at all before we proceed to gold as well? Because I've got lots of requests on gold, to look at gold as well. Any questions, guys, on the Euro JPY, Euro USD as well that we have just covered? Now we're looking at gold. If no questions, I'll proceed to just giving you a little bit of a hint on gold. As I've mentioned earlier on, it's a reversal at this moment of time, and I see the next resistance at the 1740 to 1745 area. So what does that mean? That means if you are interested in buying gold and you are already buying, just be a little bit wary with the exit level at the 1740s area. So preferably would actually be preferably to exit before 1740 or 1745, just because of the level that we are looking at here, driven by bearishness. This is a bearish zone that the buyers are actually trading in. So the buyers are sort of controlled by sellers at this moment of time, but then it's maybe it's a correction, we don't know, maybe it's a change of trend, but we would only be more affirmative and more decisive after it has broken out and broken out of the 1735 area right here, because only above this level here that we have got some support of a very bullish mother candle based on the daily chart. So we do the same analysis as we do on currency pairs. We do the same way, same style onto any instruments. Okay, so there you go. But we are not using psychological numbers on gold. We're using psychological numbers applicable to only currency pairs as well as oil. Oil could actually be both Brent and WTI. Okay, there you go, guys. Any questions from you guys at this moment of time? Questions? No questions. Brilliant. Okay, guys, I think that's basically it. If there's no question, I would like to end the session for today. And like always, if you guys have got any questions that pops up at any moment of time, do email us, get in touch with your instructors, your mentors, including myself as well, and just ask away. The more you ask, the more you would be learning, and the more we can actually apply it practically onto live trading. Okay? Okay, guys, that's it. So with that, I would like to end this session and wish you guys a great weekend until we meet again on Monday, and also a very big thank you for attending my webinar today.